Good weekend, all. Ira Epstein, and here we are coming up to the 4th of July, Independence Day holiday. Congratulations, America, another birthday under your belt. Interesting day, affirmative action rules. We're getting all kinds of crazy things. Student loan program, bye-bye. The Biden administration will try to get cute and try to come up with something away from that. But that is gone. Remember, 13% of what? The people that have a student loan, 87% don't, and they wanted the 87% to pay for the 13. At the end of the day, that's what went on. If you can't afford the education, don't get it. If you can, or you want to pay it off, there's ways to do it, but I don't think everybody in America basically should pay for one's education. If everybody says that's it, and we're going to nationalize the schools, and that's how it works, I'm for it then. Make it the law of the land. Whatever the law of the land is, I'm with. Pretty simple. Not against this. I know what it is to have student debt. You think we all don't know? You think none of us suffered? Yeah, come on. We suffered if we went to college. Most of our families were not rich. All right, so we come into a market that's pretty interesting. We saw in the middle of the week, we're watching in Portugal, main central bankers coming out, we're raising rates, with the exception of the Bank of Japan. The market could care less. This is a FOMO market. You know what FOMO is? Fear of moving out. Or missing out, I guess. Yeah, fear of not moving out. That would be me about the kids, right? Fear of missing out. And that's what's going on. People are scared of that. The gold rallied back and everything bounced today as the dollar finally slipped on all this news. And that was the interesting part. As the dollar slipped, everything came alive, with the exception of grains. And there was a special grain report that sent the corn tumbling and the wheat down and beans soaring to the upside. But everything else is pretty positive. If you're watching the weather situation, the U.S. is due for some very hot weather. It's nasty. The United States here, Chicago, I think Washington and New York, 3 cities that I think amongst the 3 of us, the most deadly air in the world because of all that forest fire air that's coming in from Canada. Unbelievable as to what's going on. We in Chicago will have NASCAR through the streets of Chicago, something never been done supposedly tomorrow. We haven't had rain at all. Watch, it'll rain. It's crazy. So when I look at the gold market, we're in a correction. We are not in a bear market. Let me clear that all out. The market is trading over the 18-month moving average. As long as you're over it, you have an overall upside bias, period. Yes, it peaked and it's pulling back. When you come to the weekly chart, it's different. The weekly chart fell under the 18 weeks. So for the immediate time right now, I have a bearish bias. So which time frame am I looking at? That's the first thing. If you look, I had drawn this 3 months ago. At least go back on, take a look at your YouTube, see the last time you have a gold report with that on there. And I thought that would be a zone, the market, the 2000 level, the market was going to have trouble with roughly. And it certainly did prove to be that. You can see how the market is coming down. The pattern is bearish. You have lower highs, lower lows. To negate the downtrend, you've got to take out the last rally high on the swing line. The brown line that attaches each of these is the swing line, and it's got the pattern there that says 1969.80. What I love about swing lines is that instead of looking at a chart like this and guessing, okay, where would I say that the last, if you will, rally high break low is? Most people would point here, but it's wrong. And let me come to it. It's wrong. It's right here. It's a lower number than you think. If that number's taken out, you negate this leg of the downtrend. If the market wants to just let go, it possibly can go to the 100-week average. If it wants to rally, the first rally zone's against 1962.5, the 18-week average. But more likely, the Bollinger Band, wherever it comes in, will be the main support. And that Bollinger Band, if we look at it, it's 1869.80. Last week, it was sitting at, how much? 1841, and the week before, 1833. So it's moving $15, $20 at a time. It's probably going to get up now to the 1889, 1890 level, and that'll be the next support zone, and you were at 1900. Did I not tell you on the daily charts, and I know I did, and I told my clients that don't hang on for that 1895 level on the dailies. You're already at 1900. You got so close, you don't need the last penny. Well, today you got a pretty good rally out of the market. You're back to 1921. And for the week, you managed to squeak higher. But this is not bullish. This is a bounce in a market that got itself oversold and getting that. Even if it rallies right now through 1969.80, you'd have a lower and low, higher high. Plain English, not ready to be bullish in the market. The gold-silver ratio, when you're over this ratio number, this is the 18-week moving average of closes, it means what? It means you need more ounces of silver to get an ounce of gold, which means gold is still stronger than silver. When we look at silver, what it fell to, though, is an interesting area. The market's come all the way down from getting up here into the 23 plus area, comes all the way back down and starts fighting a battle for support at the green line, which is the 100-week average, and the gray line, which is the 200-week average. Resistance is the 18-week in red, but I'll tell you, it's oversold. You're trying to sell into the last leg of what was a major support area. Could you get through it? You could, but I don't think there's a lot of downside. If that were broken, I'd probably look for the 2100 level because this number is going to rally just the way that you did in the gold market. If you look at 2083, the week before it was 2045 roughly, and the week before that, 2035. So I don't know if it's moving 10, 20 cents at a time, but it's doing something like that. So be over 2100. I don't think there's a lot of downside is what I'm trying to say. In the copper market, I'm still not in the bull camp. Why would I be in the bull camp? You need China to come alive. They're 50% of the world consumption. And we keep hearing, and I keep looking at U.S. manufacturing. It has not picked up. Manufacturing hasn't picked up in Europe. Service sector is what's strong. So I don't see the copper demand. And I have been the ultimate bear in the platinum market, and I now want to tell you, pick up your chips and walk away. You're caught between the upper and lower Bollinger Band. Formally, I'm saying, if it goes down, terrific. I think I gave you the play and gave you the reasons. They're not building as many cars with catalytic converters. End of discussion. They're going electric. Every new electric car built is one less internal combustion engine car. That doesn't mean they're not going to keep building internal combustion. You're not going to use them anywhere near the manner that you did for the platinum demand or palladium demand, so you want to be a bit cautious with all that. Next, the dollar. The dollar is a bounce in a market where it's trying to fight a battle here at the 18-week average and decide from there, should it get bullish or bearish? It hasn't told you. It's got flat momentum. It's flat here. Folks, if there's something to stay away on a weekly chart, this is it, unless this week's low is taken out. Now, what happens then? Then I could say I got lower highs. I'd still have higher lows. You'd have to go through last week's low. Then I suddenly get into the bear camp. Not there yet. What about getting bullish? Well, I guess if you closed over 102.71, it would get interesting, but you'd have to have stops under that low right there. And if we look at last week's low, it was 101.67. So you're almost saying, hey, close over that number and come and risk at least $1,000 to that low. So long. Why would I want you to do that? So I walk away and I say, okay, these markets are fun, but they're not the place to be. Here's the place to be. It is Independence Day, so I'm going to give you the opportunity, if you're a non-member, right now, non-member, or want to join us for a new subscription. Now, you're going to get my introductory rate. So if you've never tried it as a new person, you're going to come in, if it's $7.95 for 30 days of futures, you're going to pay roughly $3.90 something. If you want to take the 1 year, you get this one shot. You do it all at one time. It's $156, and you're getting everything for a year that I do in the futures arena. What do you think it's going to be? Half of that. So you're at what, $78? It's a great deal. And you can pick and choose which one of the programs, the combo, the full futures, where you get my writing with it, all this type of thing. It's the Independence Day sale. You go to iraepstein.com. You see that right there under research. You don't need a coupon. Our computer will do it. The same thing will happen if you're doing it through this link right up here. That is the way. This is not for existing members. You always get something special from me. This is to bring new subscribers to us. You don't get this very often. 50% off right now. You pick the research package. Come on. You spend more on a hamburger. I'm laughing. It's funny. I'm Ira Epstein. You go out. You have a great weekend, a good holiday. I will be here Monday, but obviously Tuesday we're all off for Independence Day in America. And remember, the volumes are going to fall off. Take care.